Okay, so we already have a broad idea of the basic characteristics of corporations from the previous video, which happens to be that the corporations are a separate legal entity, they have unlimited lives, but they have limited liabilities to the shareholders. However, there are several attributes of a corporation that needs further explanation. So without any further ado, let's get to rocking and rolling. Attribute number 1, transferability. So, when we're talking about transferability, we're basically talking about the ability to transfer ownership from one individual to another. Now, all three of the organizations, the sole proprietorship, the partnerships, and the corporations have the ability to transfer ownership. But from a corporation standpoint, the transferability is the easiest. And it's very distinct in the fact that, unlike the other two organizations, you don't need consent from any other owners. You don't need consent from any other operators of the company itself. However, if we decided to transfer our level of ownership to another individual, say donate it to charity or whatnot, we could simply do it without no consent of any other owners. So that's very unique in that the transferability of the corporations allow you to do so. Attribute number 2, no mutual agency. So, before we go into the topic of what no mutual agency means, let's briefly discuss the term about agency. So basically, when we're talking about the agency relationship, it's basically a legal contractual obligation between an agent and a principal, whereas the agent acts on behalf of the principal. For example, consider this famous celebrity family reality TV game, right?
If you know how I feel, why would you say that? Like, you put me in such an uncomfortable situation.
Well, they're so famous, there's so much of celebrities that it's kind of hard for them to do normal day-to-day operations like go to a Target or Walmart, things of that nature. So what they normally do is hire a particular assistant to go and do so. Well, in that particular relationship, that is an agency relationship. And basically, the assistant, who would be the agent, acts on behalf of the principal, who would be the reality TV star. And so with that dynamic, it's almost similar to that with the owners of the corporation and the management of the corporation. So what happens is, the owners of the corporation, the shareholders, have an agency relationship with the managers. Now, under that umbrella, we obviously know who are the principals. Principals are the owners, the shareholders. But the agents are simply the management of the corporation. So what does that mean? It means that the agents, who are the managements, act on behalf of the principal, who are the shareholders, to run the business successfully. However, because we said that this characteristic describes no mutual agency, the owners, who happen to be the shareholders, cannot act on behalf of the company. They cannot represent the company. So what does that mean? Let's go back to our scenario of us putting in $1 together and we go and buy a share of Microsoft. Congratulations, we own Microsoft.
I'm rich. It's payday, fellas.
Very small piece of Microsoft, but we still own Microsoft. Well, because we own Microsoft, it doesn't qualify that we can go and buy G-Wagons and Ferraris and just go ahead and put it on the Microsoft account, because it's a separation between management and ownership, and there's no mutual agency. Attribute number 3, double taxation. Damn. So basically, the shareholders, or the owners of the corporation, gets taxed twice when it comes to the income that they're actually earning from the company. Basically, when you gotta pay Uncle Sam, you pay Uncle Sam based on the income generated. Now, as personal individuals like you and I, we have to pay income tax. Well, because the corporation is a separate legal entity, they also have to pay income corporate tax as well. And so what happens is, for a period or a year as the company generates income, that income has to be taxed and given to Uncle Sam. Now, every time that the company generates income, it gets taxed on the corporate level. But remember that we have dividends that are declared and given to the shareholders, and those dividends come from retained earnings. Retained earnings is an account that we basically retain earnings. Another word for earnings is what? Income. So think about this, gang. Throughout the year, let's say that the company is generating some income. Well, if the company generates some income for the period, that particular income has to get taxed on the corporate level. Then, if the company decides to distribute some of that income generated and give it to the owners, who happens to be the shareholders, that would be done through the process called dividends. Now, once those earnings of that income that has already been taxed on the corporate level has been distributed to the shareholders, you and I, if we were to receive dividends, then we would have to report our dividends on our taxes from the personal level.
And this is the best that the government, the U.S. government can come up with?
So last but not least, federal regulations. So, one unique difference between the corporations, the partnerships, and the sole proprietorships is that the corporations are heavily regulated by the government. Surprisingly, this is a good thing. And it kind of elaborates or centers around all of the previous characteristics that we discussed. One, it being a separate legal entity. One, they're having a separation between ownership and management, and no mutual agency. And so when we think about that, who owns the corporations? The shareholders. The shareholders could be other institutions, or they could be public individuals like you and I. But because there's a separation between management and ownership, we need to make sure that the owners are being well protected from their investments, and that the managers aren't doing any bad things to manipulate those investments. And so with that being said, the state and the federal government highly regulates certain aspects of the corporation. The accounting information must be disclosed on a quarterly and yearly basis, and it must be given to the government. Now, the government has created its own separate organization called the SEC that pretty much enforces all of those things, okay? And so the government regulation is a very important thing to protect the individuals, particularly the public, from the companies doing sneaky bad things.
Call the police.
So that's it, gang. Pretty much wraps up the ins and out of a corporation in terms of its characteristics. So, if that light bulb clicked in your head and you get an even closer understanding why accounting is a joke, please don't forget to like, subscribe, or share the channel for more ways to chase that bag through this accounting information. See you soon.